What's up guys, it's Michael here. In this video, we're gonna look at what are major differences between filing forms 1099 NEC and miscellaneous W2 and 1040. So what are the difference between the three of them? But first of all, you gotta understand that W2 is meant for employees and 1099 is meant for contracted workers. And this video, we're gonna look down and break down the whole entire list, what are the difference between the three. As for 1040 is just a summary of the two types of income that can be received in. It's just a summary. You must be asking why you need to have a summary is because there are different tax filing dates, and also it's different for how they are filed. For example, W2, your employer takes care of it for you. They send it directly for you, so you don't have to calculate all the taxes. 1099, yeah, in the other hand, is a contractor worker, meaning you have to file your own taxes. So a lot of people say 1099 you get more of the benefits. That's actually partially true. Meaning is there's a chance, or depending on the circumstances, put it this way, is if you use and utilize 1099 NEC and all of the other miscellaneous in there correctly, then you can pay less taxes. But if you don't utilize it correctly, you actually pay more money in taxes versus W2. So before I continue, please click the subscribe button down below and the like button. So let's break down to it. So first, we're going to look at W2. W2 is known as wages return. It's meant for an employee. For example, if you decide to go to a workplace and you decide to work for someone, you pay by hourly. That's known as employee. Basically, they pay you wages or salaries, paid by hour. So what the difference is, you don't really get a kind of like a set amount or a fuel amount. But when you pay taxes, you have to pay 2 times the federal, which is 6.2%, which includes Social Security tax, and another 2 times federal, which you cannot avoid, which is another 1.45% Medicare tax. Then you have 0.9% state disability tax. The state disability tax really depends on your state. For example, California is 0.9%, but in Texas may be different. Florida may be different. So when you talk about taxes in this channel, you got to understand there is federal and there is state. Federal is mandatory by all 50 states and for everyone living within the 50 states. As for state taxes, they are mandated depending on where do you live. For example, California is different, New York's different, Kansas is different, Oklahoma is different, Nevada is different. So first, you understand within a W-2, there's something called federal withholding tax and state withholding tax. In W-2, your employer mainly takes care of it all for you, so you don't have to basically calculate and think for you, which saves most of the time all the employers, gives them more work. For employees, they don't have to think. But the trade-off is if you don't do the work, then they can tax you in a crazy amount versus 1099 NEC. So 1099 NEC is known as non-employee compensation, meaning is you hire someone as contractor work, and basically instead of you telling them what to do, they will decide what they're going to do to fulfill that contract. And that contract is based on whatever type of project. So W2, you tell your employees what to do. 1099 is mainly the opposite. You give them a contract, this is what you want, and it's their job to accomplishment. So first you look at is they're not categorized as an employee. A lot of people make that mistake is, for example, a lot of employers hire someone and they realize they try to consider them as a 1099 worker. In reality, they're actually W2. That can actually get them in a lot of trouble and a lot of trouble with the IRS and audit. Then we look at 1099. When you categorize them, you gotta remember, it's a contract. If you're paying them hourly, then it's not a contract anymore. And there's a lot of circumstances people have to be really careful. So for 1099, it's a non-employee compensation. What do you mean by that? It means that you either pay your contractor, pay in the full amount, and for in general, deductive expenses. And the deduction expenses are based on a section called 162. So there's a whole entire section I cannot cover in this one video, but you can look it up in yourself in Google. I might even put the link down in the description below. Section 162 generalizes and also categorizes all the type of expenses that you can write off and can be part of the 1099. The list is massive. And you think about it, even the list is massive, even cannot be covered in this whole video. There's a lot of other types of expenses that is really hard to categorize, and it's whether or not for the person writing the taxes to figure out for them. So section 162 is known as Internal Revenue Coder that tells you all generalized expenses, what can be considered as taxable or non-taxable type of income or spending. So when you look at that, then went to 1099 NEC and miscellaneous and W2, it goes all directly something called 1040. 1040 is known as the individual income tax return. So 1040 or 540. So that usually consists of anything going there at the W2, 1099 NEC, 1099 miscellaneous, 1099 INT. Do you have 1099 dividends, 1120S, K1? So all of those at the end, you take all those files and all the data you gathered, they put it into one whole entire file, which is known as a 1040, which you have to file once a year. So when you go down that list, then what is the difference between the two? What's the major difference between 1040 and 1099 and W2? First, we're going to look at Form W2. It's usually due by January 31st of every year, and it's usually due, the file you have to perform and turn in is within January 31st. When January 1st is usually the year before. For example, this coming up is 2023, then you have to submit your income tax return for the previous year, 2022. So first, the Form W2. If you hire an employee, they will usually send you a form called W2. And you gotta know as tax employment, taxes must be withdrawn from salary, meaning is your employer has to withdraw the taxes from the salary when they pay you. For example, if you have a wage making, let's say you are working for a tech company making about $10,000 a month. So within a $10,000 a month, then all the taxes have to be deducted. For example, you have wages, 10K a month, then you have something Social Security, 620, which is at 6.2%, which they'll take that away from your paycheck. Then you have Medicare, another 1.45% in total, $145 taken away from your paycheck. So that's within the first round batches that take away from federal. That doesn't even include state yet. You include state, it takes out even more. But just to make it easier, we're not going to include state, which will lead up to $9,235. So if that's the case, then you have to figure out what is federal income tax, what is state income tax. When that goes down to it, then you lose even more money. Then your take home, it's going to be smaller than $9,235 for as a W-2, because those are the basic amount of tax you have to pay. Again, you have the rest I will not list because it's very long. So depending on how you make, and they'll take away even more. So if your take home, hypothetically, $9,235, which in this case shouldn't be, but just to make it easier, you have to, after you take out home that amount of money, give the benefits of W-2, you got to pay for insurance. So let's assume insurance, you have to pay about $1,300 plus another car insurance, plus you have to pay for rent, another $2,000. You're left with $6,835. So after you pay with all, let's assume you paid all the taxes, you're left with $6,835. That is what you have to pay on your W-2. Usually, most of the time, they take care of it. Like I mentioned before, you don't really have to think much about it. So Form W-2, taxes have to pay. You have to pay whatever set amount. You cannot take any deductions. That's the unfortunate fact, as if you are an employee. But now you go down to the other case. If you are a contract worker, for example, you can be a business owner and you can actually still do contract work. So you could own your own business, and your own business can, let's just say, apply for some type of contract work for another company. Let's say you had to do something small for Microsoft and they pay you a set amount of money, or you have to do some type of construction work and they hire you because they couldn't find someone within their own field. So they contract you as the employer for a short duration amount of time. So it's a contract work. You sign a form, you sign a contract, and you set it in. Instead of hiring you as an individual person, you're still not exactly part of the company. Meaning, if you are a 1099 worker, that means you will not be paid on the benefits. For example, insurance, driving, fuel, etc. Then they will not cover it. Which, in case on W-2, health insurance, they cover it. All the other types of insurance, they will attempt to cover it. And when I mentioned when they cover it, does it have to be the good insurance or the bad insurance? Most of the time, they usually pick the cheapest route. But besides the fact, let's look at what does 1099 NEC. So same thing as W-2. In January 31st of every year is the due date for it. And same thing, it's the year before. So now coming up, 2023, then the tax return for 1099 NEC, then it's got due for 2022. So that's the year before, has to be due that coming up of January. So first, look at Form 1099 NEC. If you can hire an independent contractor, and quote, independent contractor, the meaning is you do not pay them by hourly, because a lot of people screw this up and pick the wrong type of compensation. They usually say, hey, this guy's not from W2. He's actually a 1099 worker. In reality, they're usually a W2 because you're paying them by hourly. So a lot of people screw this up and you can get them in big trouble. So be wary of that. And also be wary by clicking the subscribe button down below. So going on, without the jokes, but making quarterly estimate tax payments. Meaning is every quarter they have to make some type of tax payment, but they have to calculate themselves because if you're a contract worker, you don't have your employer to do it for you because you are the employer. You're part employee and part of employer. You're technically both at once. You have to calculate themselves. So this is where section code 162 come into play. Meaning is what type of taxes that can be deductible. Meaning what type of taxes that can be deductible within that section and within the section revenue code. Meaning is, for example, your driving, for example, your car, for example, your business fees, your office expense, your eating, those can all be deducted in taxes. Now, as I mentioned earlier in the video, this can go either or, meaning you can screw this up and actually pay more taxes or do this correctly and actually pay less taxes. So first, you gotta understand is if you pay, you will need to give him or her, for example, if you're hiring someone for a contract worker, you have to pay him or her a form of 1099 NEC if it's over, I believe, $600 a year. If you hire someone, it's a contract worker, pay them more than $600 a year, you have to give them a 1099 NEC. So first, you're going to look at a couple examples. How is this categorized as a 1099 NEC versus W-2? So you send them a contract over $600 a year. You don't pay them all the insurance and benefits. You basically hire them to do a specific project, and after that, they're on their own. Then you look at, for example, service income. Let's say it's a service job. You hire them, and they're paid for a 1099 worker. Let's say the 1099 worker made, let's make it easy, $10,000 a month. So it's assumed that they don't take home $10,000 a month. They're like the W-2. They have to pay taxes, but the taxes, the employer doesn't deduct it. You, as a 1099 worker, have to deduct it yourself. So your take home is supposed to be 10 grand. Let's start from there. Then you said it's definitely not going to be 10 grand because you have to pay the federal income tax, which is 6.2% of the 10,000, but you have to pay it twice. When you pay it twice, it leads to $1,240. Then you got to do the same thing for all the insurances. Let's say for the Social Security, the Medicare, you have to pay those. So Medicare on our 1.45%, multiply them by 2, make it $290. Then you're left with $8,470. So if that's the case, you're actually taking home less money. So you lost a lot of money. Then next thing you know, that's for scenario A. Scenario A, that is the case. So you basically get taxed for all that tax, but you don't really have anything to write off. So you get taxed to $8,470. Which is, in general, pretty much, like, you think about it, getting taxed $8,000 of that is usually the bigger the number, and you get taxed on a bigger number, the more money you lose to taxes. Now, let's look at example B. Example B, on the other hand, is you have a service income, same thing, $10,000 a month. Then you have service expense, $8,000. Then you only suddenly have $2 grand left. Then times 15.3%, adding, let's taking whatever they paid from the previous, for example, A. Then in total, 15.3%. But 15.3% of what? 15.3% of $2,000. So here is the part where you have to understand. Section code 162, service expense. What can be part of service expense? Your car, fuel. If, for example, you have an electric car, you have to charge electricity. If you drive a gasoline car, you have to pay for gas. If your car gets damaged during transportation, you have to pay for that. Food, you have to pay for that. Anything that can be related to your business can be categorized as a service expense. So you have 3 numbers in total. W-2 is $9,235, and if you, after we take away all the expenses, you have $6,835 you got to take home. And you look at for 1099, example A, you have $8,470. Then you have example B. At the end, once you pay for service expense, then you have $2,000 left. Then you pay your tax, which is 15.3% of $2,000 is $306. You have $1,694 left. That's the only amount of money you can take home. So here is the interesting part. You have these technically 3 numbers. So first one, Let's look at Form W-2. Form W-2, you have your $6,835 left. You can use to spend whatever you want. Basically, all the taxes have been paid. You take home $6,000. Okay, that's the benefit right there. So you have $6,000, $6,835 to take home, spend whatever you want. Now we look at Form 1099. The first one, example A. Example A, you have $8,470. So with your $8,470, you paid your taxes, but you haven't paid the rest of expenses. For example, you have your state tax you have to pay afterwards. Meaning is you have to pay tax on a larger the number. So basically, this is a numbers game. The larger the number you get taxed on, then the bigger amount you get taxed on. So your $8,470, if you have to pay, let's say, like another 5% or like 9% on that, then you could take out a huge chunk of money that goes to the government. So technically, Form W-2, even the number is smaller, they actually make more money than the person in example A for 1099. But then you ask me, Michael, then how about example B? Example B, they're only taking home $1,694. So that's what they take home they can spend for the rest of themselves. Then how does that make sense? Did I mention that in example B, you have something called service expense where they spend for $8,000 in their businesses? Their business expense, you can actually use it for at home too. For example, let's say your business expense requires you to drive to places, meet people. For example, you have to buy clothing from Louis Vuitton, Hermes. You have to upgrade your car because, well, it's part of your business. You can explain it to them and say, hey, I go to meet people. I have to dress, I have to meet their expectations and dress like that. Then you can take home that vehicle and you can categorize as that part of the expense. If you categorize that part of expense, you're technically, it's part of your business. So you have to follow the section revenue code 162 and you can write it off from there. So in reality, basically, you look at 1099, example A, you pay the most amount of taxes and you actually take home the least amount. W-2, you basically paid all your taxes and you only have that set amount left, but you don't get the upgrades. For example, if you purchase a vehicle, that's got to be taken off. That won't be tax-free. That will be used for your own income. And you look at 1099, example B, all their service expense was $8,000. For example, let's say they want to buy new clothing. Let's say the number is way bigger than 10,000. Let's say it was 100,000. They wanted to buy a new car. When they buy a new car, it was part of the service expense. And let's take everything and multiply it by 10. So let's assume they made 100,000 and the service expense was $80,000. Their $80,000 was part of the car. They bought a new car, but their new car, it's part of the business. But at the same time, they can use it for themselves to drive themselves home. Basically, they got a free upgrade for their car. Well, can't really call it free. It's basically tax-free for their car. Their tax would be withdrawn within a 5-year period. But this is the major example why you see a lot of people drive newer vehicles that have better clothing, or you see why people complain that why do you see a lot of business owners make a lot of money versus the employee. And when it's done right, a 1099 can have a lot more benefits compared to a W-2. And that is one major example of it because the government wants you to spend money. If you don't spend the money and you want to hold on and invest in something else, they will tax it right away. They take over a big portion of it. So instead of paying tax and such a large amount number, you rather just use it for yourself or use it for something else. Then you can write it off. So a better example to make it more clear. Let's say you have $100,000. You have $100,000, you have $10,000, and you have $1,000. If you pay 10% of $100,000, then you have to pay, let's say $10,000. $10,000 disappears right away. If you have to pay, let's say, 10% of $10,000, it's $1,000. So $1,000 goes to tax, disappears. If you have to say you have to pay 10% of $1,000, just $100. Then the rest goes to whatever you want. So you rather pay that 10%, a small amount number, and you have the rest of the expenses you used up for whatever you need that can be related to your business. Because keep in mind, to consider as a business expense, it has to be related to a business. If something looks really suspicious, for example, let's say you're in a woodworking business and you're all of a sudden buying electronics out the wazoo. Like you buy a new computer constantly and you don't have any new employees coming in, or you're buying constantly bunch of brand new cars. Like instead of buying trucks, you're buying sports cars, and you always buy another sports car, you buy another truck, and they're gonna come back and ask you, it's like, why you need so many? When they find something suspicious, then you won't be able to write that off. Now, Covering 1099 and W2, then now we're going to look at 1040 and 540 individual income tax return. So this actually varies differently from state. So for example, California, you have to pay for income tax. And you look at Texas, Florida, and Nevada. Those are completely different. They don't have income tax, but they'll get you somewhere else. Like I mentioned in previous videos, which you should click the subscribe button down below and the like button, which will get you, for example, property tax or some type of other bill. They'll get you somewhere if you don't have to pay income tax. So 1040, as I mentioned, is usually filed and due on April 15 of every year. So coming up for 2023, when it hits around April 15, that is when it's due. That's where all the CPAs panic and you have to get all the work in. And as I mentioned in my previous video, you should go watch, is you guys should submit your returns earlier. Meaning is if you have someone or you're running a business and you need the return to be done, just submit it to your accountant a lot earlier, because you think about it, they have a lot of other people who are waiting in line besides you. So unless you're a really special client and you give them, like you pay your accountant a lot, then that's a different story. But going on, looking at 1040, the individual income tax return. So why you have to file it? Because first of all, like I mentioned earlier, 1099, you got to do all the expenses yourself based on monthly, and W2, your employer does it for you. But at the end, that's the initial phase. The second phase is basically the final phase, which they take all the income combined into one form, which is Form 1040 or 540. So what it does is it summarizes all the income in 1 year. So within 1 year, it takes all the income combined together to see if you made any mistakes. You can consider it as like a double check. So you can look at some expenses. Can they be written off? For example, property tax, mortgage interest, and not too many expenses, but it really depends on what type of job. So if you're W2, then you cannot write off like property tax, mortgage interest. If you write 1099, depending where your business is located, for example, if your business is located in your house, then that's considered as property. The property tax you pay on there could be negotiable on whether or not it's taxable or not, or it can be tax write-off because you're running your business within your home. That's why you see some people have business in their home. That's the reason why. Then you have to determine how much is taxable income you have by doing the calculations. So in Form W2, most of the hard work and legwork has already been done. If you're 1099, you have to do this yourself, or you hire someone, for example, an accountant or a CPA, they will do it for you. Then after that, once you do all the calculations with the Form 1040, which you take all the calculations together, then you have to pay the difference. So whatever difference you owe, for example, if you were mainly filing 1099 and you screwed up somewhere and you forgot to add this expense, and if you forgot to add this expense and you see that there, then you have to pay the difference. That's what it's for. So you look for incomes W2, 1099 income, all those combined, anything you're missing within 1040 will tell you at the end. So this was a really long video. I hope you guys enjoy. Please click the subscribe button down below and the like button. And next time we'll cover section revenue code 162. So we can look at if you do run a business, then what type of location should you pick and what type of expenses that can be written off. So that's it for this video. I'll see you guys next time. I hope you guys enjoy. Please click the subscribe button down below and I'll see you in the next few days.